Hello, I'm John Crowther. Welcome to This Week in the Markets. Markets, we're dealing with cross currents this week. Still dealing with the inflation reports, CPI and PPI, consumer and producer price indexes, that were stickier and somewhat elevated month over month than was expected. That was confirmed somewhat by the Federal Reserve when it released the minutes from their January meeting. They talked about being cautious, not wanting to cut rates only to have to raise them up again in case inflation was to spike up. The idea of rate cuts for March now are basically off the table, while the bond and stock markets now are factoring in May or possibly June for the first rate cut. That remains to be seen. Stock market indices pulled back somewhat this week, but at the same time, we're buoyed by the artificial intelligence boom, as shown by the corporate earnings by NVIDIA. The S&P 500 is now close to an all-time high. One thing I'm looking at is the divergence between the S&P 500, a proxy for the United States stock market, and the Shanghai Index, a proxy for Chinese stock markets. While the stock market is not necessarily a proxy, but it is a window into their economies. The United States is above trend GDP over the last few years, while the Chinese GDP has been below their trend. Remains to be seen if this divergence can continue, and even if it does continue, the ramifications for the global economies, supply and demand. I'm John Crowther. Thank you for watching This Week in the Markets. Have a great week.